Thank you, Fernando, for your kind presentation, and welcome everybody to a new GPM webinar. And this time, as Fernando has commented, we are centering our analysis on the Chilean market. So, as Fernando has said, my name is Carolina Fondo, and I am a manager of Creara Energy Experts, former Clarion Spain. And I have collaborated in more than 20 projects focused on renewable energies and energy efficiency since I joined this company in 2010. So let me start this presentation firstly and very quickly introducing my company. Okay, so if you have had the opportunity to attend to any of our webinars on GPM series, you may remember our company under the brand of Clarion Spain. Well, in January 2014, the strategy consulting boutique, Clarion Spain, and the Spanish energy services company, Creara, decided to combine businesses and efforts, and this way to expand their joint leadership in sustainable energy services. And the merge was consolidated to 2014 and resulted in the new brand, Creara Energy Experts. We can say that Creara and Clarion have joined their capabilities, both the experience in strategy consulting and also in the energy sector. And thanks to that, the resultant company, Creara Energy Experts, can be considered a leader in professional services in the energy sector. So, well, after this, let's start with the overview of our last GPM report, centering the Chilean market. As some of you already may know, the Grid Parity Monitor, the GPM series, analyzes PV competitiveness on different energy markets worldwide, both for residential and commercial installations. We are talking about between 3 and 30 kilowatts, as well as for large PV facilities selling energy to wholesale markets. In this case, we would be talking about ground-mounted installations of 50 megawatts. So this specific GPM focuses only on the PV Chilean market. But it is worth to mention that if we combine all our GPM reports, that of course they are available on the NAR's website, and I strongly encourage you to download freely. If we combine all these studies, it results in 14 promising markets all over the world. For example, France, Germany, Italy, or UK in Europe, also Latin, Brazil, Chile, Mexico, and another market, for example, Australia, Israel, Japan, or Morocco. In each GPM study, we analyze one of these markets, and in some of these markets, we may study all the installations, all the segments, utility scale, commercial, or residential, or only one of these. It depends on the issue. So as you know, the GPM studies are based on a rigorous and transparent methodology, and this methodology is detailed on different documents of the series. And we use up-to-date information provided by local and global installers, associations, and other reliable players on the PV industry, specifically provided for each market, or even for each city when it is necessary. And of course, our analysis are reference, which is essential when studying PV world, the PV market. And this market, as you know, is constantly in evolution and suffers important changes almost every year, if not every month. As usual, we are very proud to have the support of relevant PV companies all over the world, and in this occasion, Jinko Solar and Solar del Valle have been our platinum sponsors. Also, the Spanish company Ingeteam has collaborated as a gold sponsor. Of course, we also want to thank the collaboration of European Copper Institute, and also to our technical partner, Geomodal Solar, and especially we want to remark the contributions of the Chilean Renewable Energy Association, ACERA, which has validated the main contents of this report. So, before exploring the main results of the report, it is important to define some basic concepts regarding PV competitiveness. And firstly, it is important to make a difference, to differentiate the analysis for the residential and the commercial segments where we will be talking about grid parity and levelized cost of electricity, this is LCOE, and the concepts that are associated to the utility scale segment, for which we have proposed a different approach based on PV generation parity. So we're starting with the PV grid parity, which I remember it affects the residential and the commercial segments. So PV grid parity can be defined as the moment when the cost of generation PV electricity is equal to the price paid for grid electricity. You can have a look at the illustration on the slide here. Just to have a quick and a visual understanding of this concept. So as you can see, we can define two different situations. The first situation would be, as we can call, the trade grid parity situation. This is where grid electricity is cheaper than PV generated electricity, and thus PV will need support for its development. For example, feed-in tariff, tax credits, etc. And we have a second situation, the post-grid parity situation, when PV generated electricity is cheaper than grid electricity. And as a result, it will be more convenient to self-consume PV electricity than to buy electricity from the utility. It is important to remark that for the sake of simplicity, this report compares PV LCOE with retail electricity prices. But in real world, in reality, depending on the local self-consumption regulation, a part of the PV generation might be lost or valued at a lower rate. In this study, as I have said, we are supposing that 100% of the production, of the PV production, is being self-consumed. As we have said, in the study of grid parity, we compare PV levelized cost of electricity, LCOE from now on, with retail electricity prices. So the PV LCOE is defined as the constant and theoretical cost of generating PV electricity, whose present value is equal to that of total cost associated with the PV system over its lifetime. This concept, the LCOE, can be expressed either in nominal or in real local currency per kilowatt hour. And in this GPM analysis, well, in this GPM and in all our GPM analysis, nominal one will be calculated. So LCOE accounts for all costs associated with the PV system over its life, over its entire life. It also considers the return required from the investment to discount future costs and also production to present. And this slide represents the LCOE calculation from a residential point of view with its respective equation. So I encourage you to have a look to this slide, to the picture, and also to the equation to have a deeper understanding of this concept. From a commercial point of view, the LCOE equation and the LCOE concept changes a little. It is almost the same, but it changes a little. The same concept remains, but so this is, of course, the LCOE still represents the constant and theoretical cost of generating PV electricity along all the lifetime of the installation. But the costs that are associated with this concept are a bit different. The biggest difference is that in this analysis we have to include the income taxes impact as they affect cash flows on the project. So you can see that the equation is a bit bigger, a bit larger than before. So this analysis calculates after tax cost and includes the impact of depreciation for tax purposes. When analyzing cost and competitiveness of the PV technology against grid electricity, the reader should bear in mind that what is really being compared is the cost of electricity generated during the entire lifetime of a PV system against today's retail price for electricity. That is, one should know that while by definition PV LCOE is fixed as soon as the PV system is bought, is installed, and it will remain constant in the future, future grid electricity prices are likely to change. So this situation is explained, or at least we try to explain the situation in the slide number 11. We have two different figures, and I want to remark that these are illustrative figures, so they don't present real numbers or results. But I think that they are useful to understand the concept that I'm trying to explain. So the first one shows the evolution of PV LCOE from 2009 to 2012. So each year represents different installations, and thus different values for LCOE. This is the value, for example, for an installation installed in 2009. This is for installation in 2012. So this is to say, in 2009, if you install a PV system, let's say that the LCOE was around 120 pesos, for example, but if you install a PV system in 2012, it was around 100. If we have a deeper understanding, a deeper look at the 2012 installation, we have to look at the second figure. Here we can see that the LCOE for this specific installation remains constant along all the PV system life. But electricity prices are likely to change. So while LCOE will remain with 100 pesos, the electricity prices are going to change from 70 to 200 in the next 30 years. Okay, so until now we have explained some concepts which are relevant to residential and commercial installation. These concepts are going to help us to understand the main results of the report. But now it is time to explain the main ideas in order to understand also our analysis within the utility scale segment. So we have to talk about PV generation parity, not grid parity, but generation parity. PV generation parity is defined, or can be defined, at the moment when profitability requirements of PV investors are completely fulfilled with wholesale electricity prices, without considering any specific financial incentives of PV production, such as feed-in tariff or tax credits or whatever. And as happened before in the grid parity explanation, two different situations, can be defined. The pre-generation parity situation and the post-generation parity situation. In the first one, wholesale markets cannot fulfill investor requirements, so PV will need support mechanisms for its development. Feed-in tariff, tax credits, etc. In the second situation, the required PV tariff needed for the investor is lower than wholesale prices. That's to say, wholesale prices in this market are such that the IPP, the investor, would achieve at least the minimum profitability sought in order to build the PV plant. In order to evaluate generation parity proximity, the economics, so the P&L, the cash flows, etc., the economics of PV utility scale plants have been analyzed, always from an investor's perspective. And for this purpose, a project finance structure has been modeled, taking into account all relevant economic considerations. This option, the project finance structure, was chosen for being the most commonly used mechanism for this type of installation. However, it is important to bear in mind that PV systems might be financed with a less expensive structure. It will depend on the company, on the investor, on the situation in each country. But we consider that project finance was the most commonly one, so this financial structure was chosen for the analysis. And well, with the study on the economics of the plant, we have defined a theoretical rate, and we have named it the required tariff. This required tariff is the tariff with which the PV investor would achieve at least the minimum profitability sought in order to build the PV plant. This is, with this rate, the PV investor would fulfill at least the cost of equity that he's asking for this specific installation in this specific market. So in this slide you have, again, an illustrative figure explaining which are the main cash flows that we have considered in the analysis and the logic that we have used in order to find this required price. Next, So this required tariff has to be compared to the local market price in order to determine if there is generation parity in the country or if there is not. We think that the following market prices can be considered as a good reference for this purpose to compare the competitiveness of this specific market. So we have to look to marginal prices of day-ahead market in power exchange, or even price of PPA contracts that are negotiated freely in a liberalized market. So we have to compare if we take into account a PPA price, a typical PPA price within this market, or if we take into account the typical marginal prices of a spot market in this country, these prices are enough to fulfill investor requirements, the cost of equity that the investor is asking in this market. So as you can imagine, for example, PPA prices are not always easy to obtain. As you can imagine, no public information is available many times. So we have considered an alternative, the GPM methodology. Select between these two alternatives as a practical simplification: marginal price of the day-ahead market in the power exchange, when possible, when the country has a spot market available, and also a regulated tariff for large consumers. So in countries where no spot market exists, it has been selected this option as a theoretical upper boundary of a PPA contract. In this specific GPM, because what I have explained is the general idea for the GPM methodology in the utility scale segment, but in Chile we have a spot market. So we are going to look into marginal prices in one specific node of one specific electricity system in Chile. Next, now I'm presenting a quick overview of the main results of this report regarding 3 different types of installations. So we are starting with the residential segment. We are talking about installations of 3 kilowatts. Then I'm going to talk about the commercial segment. And finally, I'm going to talk about the utility scale segment. The first one, residential segment. You can see the main results on this slide. We have chosen 2 specific locations for this analysis. The first of them, Santiago, as the most populated city within the country, and the second, Copiapó, which is located in the north of the country, where solar radiation conditions are optimal. You can see in the figures that grid parity has been reached in both locations. But of course, while in Santiago, the grid parity is partial, so it exists only if we consider the standard tariff plus the surcharge of winter. In Copiapó, full grid parity has been reached, also considering just the standard tariff. We think that as the small-scale PV market is a relative new market in Chile, it will be possible to find a margin for price reduction. This will help to improve this segment in the short and in the middle term. If we have a look at the commercial segment, as I have said before, we will consider an installation of 30 kilowatts. And this time we have only chosen Copiapó as the theoretical reference. And as you can see in the figure, grid parity has not been achieved, despite the fact that the LCOE has decreased an annual 17%, more or less. And the main factors that are not allowing this grid parity, we think that they are the following. First of all, low variable electricity prices for the commercial segment. Second of them, high PV installation prices. And then a relatively high discount rate. If you would like to have more details about what discount rates we are considering or which are the specific prices for each installations, you can always have a look at the complete report. But I want to remark that we have limited time, so I'm going to give you only a quick overview of the main results. But of course, you have all the information available in the original report that you can download freely in the Leonardo website. Finally, the utility scale segment. We said that we were talking about a 50 megawatt plant, ground-mounted installation with single access tracking. And the specific location would be in Diego de Almagro, which is in the Atacama region. So as you can see in the present figure, reference prices are clearly above the required tariff for a PV investor. And that's to say, currently, full generation parity exists in this spot of Chile for a large PV producer. So the electricity node that we have chosen as a reference, which is Diego de Almagro's node, belongs to the Chilean fixed market, which we could translate as central interconnected system. And although this electricity market has presented high volatility rates in the past, now into potential decreases in the spot market. And the required tariff for PV investors represents less than 50% of current spot market prices of the last 2 years. So we are quite comfortable saying that full generation parity exists in the country, or at least in this specific spot. As a quick overview of the main conclusions of the report, we have seen that the cost of PV generation, as expressed by the LCOE, has decreased in both residential and commercial segments. And on the one hand, on the residential sector, this fact has led to reach full grid parity in Copiapó and partial grid parity in Santiago. But in the commercial LCOE, grid parity does not exist, mainly due to a relatively low variable component of the electricity tariff. And regarding to the utility scale segment, full grid parity exists, full generation parity exists in certain locations within the country. So current high prices in the spot market allow enough room to protect the investor from potential falls of electricity prices. Of course, it is important to remark that despite the fact that PV competitiveness has not been reached in some segments, for example in the commercial segment, this is not a complete impediment for a future PV market development. The motivation of a PV developer can be very different and can go from environmental needs, green requirements, maybe securing your energy sources. So many of these factors could contribute to a major technology development. And of course, it is necessary to remark again the necessity of monitoring the PV market, Chile or any country, given the volatility of electricity prices, the fast decline on PV prices, and possible regulatory reform. For example, you can have the example of Mexico with the energy reform, and you can understand the necessity of look to the Mexican market or any market every year or every 6 months to understand what is happening and what is going to happen with PV energy and PV electricity. So thank you very much for your attention, and let me introduce you my colleague Davide Sabatino, who will explain to you which are the following GPM reports and the dates that we are considering for the next launching report.
Good afternoon, good morning. Thank you, Carolina, for introducing me. This is Dario Sabatino. I'm the project manager of GPM reports. I just want to show you the planning we have for the next upcoming issue of the GPM reports. We will publish this month on May two edition, one dedicated to Mexico. It's a special one where we will analyze all the segments, residential, commercial, and utility scale. And then we will publish the second issue of the commercial GPM. Finally, on July, we will publish the utility scale segment, the second issue. So if you want to support our reports, please contact me at the email shown on the presentation. Thank you very much.